Ladies and gentlemen, K Kim here. Welcome to the daily update. Today, hope you guys had a good day trading today. Market is up about 1.73% today on the S&P. I think yesterday when we did the update, the market was at 292 here. You can see that long bearish candle on the last hour selling pressure. Bears definitely didn't want to see this. This would have been the worst case scenario for the bears because now that selling pressure is completely nullified. There is no longer selling pressure. And so I think the couple things we talked about yesterday was first, I think I mentioned it many times throughout the video, is that the benefit of the Dow goes to the buyers in the longer term. So when you see a trend, staying up, the wind is blowing to the upside. Something like this. There's a higher probability of something like this happening, right? So this is why, you don't want to act emotionally in the short term. I guess more in a short to micro term, where just because you see last hour of selling pressure, you shouldn't be so quick to, flip to short or, unless you're a very, very short term trader, you're like, scalper, you're very short term. If you're like a longer term, the shorter term selling pressure, the micro term selling pressure shouldn't affect your longer term view of the market, because you know how this market is, man. It's never a straight line. It's never easy. It's never give you a perfect green line. Every single day, it always make you guess. And that's what this market is. So if you follow the market too closely, the market knows how to push the right button and, get you to be scared or do things that you shouldn't have done, or making mistake, getting in and out of positions too early. And so I think it makes sense to kind of understand the longer term trend of things. And that's why I think in these videos, I always give you the short term analysis first, and then I zoom out and give you the big picture. But anyway, so today, this was the first hour. We gapped up. We started the day with gap up here 295, right? So let's move this up here now. So that's important pivot, because you can see prior resistance has now become new support, right? So that's we saw the follow through the first hour. Second hour, you know what the second hour did? What that did was, because I think last week we talked about how bears were not able to fully fill the gap. Remember that? We talked about that. So you can see this was what day was that. Here, let's do this. This right here is May 18th. Right? So on the May 18th, we saw a pretty significant gap up, right? I guess that was Monday. Yes, that was Monday. So Monday, we saw a pretty significant gap up. We saw a big rally to the upside. We went as high as 296.7 there. And so what happened was there's big gap here, right? Because there's where it closed, and then it opened way down there. So there's a big gap that opened up, and that was back in, that COVID-19 panic selling that happened in early March. So bulls got up here and failed to fill that gap all the way. We left just a little bit, and I specifically covered this on Monday night's video that's actually in the short term bearish. Bulls should have filled it all the way. We also talked about on Monday that bulls are working with tired condition, overbought sentiment, right? So that's when we saw that last hour puke on Tuesday, right? And then today, bulls gapped up again. And now this gap has been fully filled. So this is actually very constructive, not in the short term, but in the more of a mid to long term. Because as you can see, it took a while, but buyers are faithfully getting up because there are a lot of gap downs. There's so many gap downs because you guys remember in March, I mean, every single day we saw like 5% gap down, right? Every single day, you know, there was gap downs and gap downs and gap downs. So there are many gaps, and a lot of those gaps are filled. And looking at if we zoom out a little more, and you can see that now we can see, looking at a bigger gaps, out of so many gaps, there must have been like 10 gaps or something like that. There are about only 3 gaps remaining. We still got some gap from here, and that's a big gap back in, so we got 3 gaps remaining to the downside, but we've been covering this. To the upside, we have 4 gaps for the buyers. So do you see that something has shifted as far as momentum is concerned? Even just tracking these gaps, you can able to see. Now I'm going to bring that back up because we gapped that up. Now you can see that bulls opened up more gaps than bears, and then in that process, bulls were able to fill those down gaps. So today's action is very constructive, not in the short term, but mid to longer term, that this gap has been completely filled. So with that gap filled today, and that's where we found some resistance there throughout the rest of the day, pretty much. Some kind of a bull pennant pattern, but me, I don't always go by that. But we're holding up. So you can see, if we zoom out a little bit, that moving average that I've depicted yesterday, because you can see that moving average, that's where we were yesterday. We found support there. So if we see bears bring it down, we got a couple levels here. I think 292 is where that's where we gapped up today. So that's going to be level of support. 294 in the middle part is where that short-term moving average, right? That's that moving average right there. E means exponential, S means simple, L means setting at low, not setting at close. So that's where that is. So we got some of these at level 295, 294, 292 as potentially a support if we see a slide going into tomorrow. What buyers wanted to do, buyers have gathered a lot of momentum here. Buyers have been pretty fierce when it comes to not letting the bears bring it down. Even on this day, not even little support in that vicinity. We just gapped that up. So there's a lot of momentum built, and I think bulls want to continue in that, and I want to continue to give a benefit of the doubt to the buyers. Next level for the buyers to fill will be that 303. 298 gap here. This is the gap bulls want to go up and fill it. What bears want to do is bears want to make sure this gap does not get filled. They want to protect this gap, and potentially that gap being a resistance and bring it back down, right? So let's zoom out here real quick and talk about kind of a longer term picture here. And it's interesting because we actually talked about this yesterday. We have almost identical price action, because we talked about with the oscillator here. You can see oscillator got into the overbought level, right? Oscillator got into overbought over here. Oscillator got into overbought level. Oscillator got into overbought level. And then subsequently, you can see price declined a little bit. And then we saw the last hour selling pressure. Price moved sideways this time. And we saw the last hour selling pressure. And then we saw a gap up next day. And then today we saw a gap up next day. And we talked about this yesterday, how sometimes, you see a move to the overbought level, and then there could be another move up higher. And I even called it a potentially, stochastic double top. And it's very interesting, I thought, that how just, this here gap up, they're almost mimicking each other. And it's just not happening in a random level. This is not happening in a random level, right? It's happening after the move. You see there's a gap up here. There's a gap up here. So we got the gap up, and then we got into overbought, and then we moved sideways, and then a last hour decline, right? And that was pretty fierce last hour decline because it was holding up the whole day. And the next day a gap up, and the next day a gap up. And then we see a consolidation, and then a consolidation. If the market decided that it's going to continue to do what it's been doing, similar to early May here, May 7th, then it looks like next day we saw another gap up. I mean, it's been pretty much following this script here this whole time. This script right here. That's what it's been doing. So if the market decided it's going to do what it has done in early May right here, then we may see some kind of pop here. And then at that point, you will see the oscillator kind of gap back up to overbought level one more time. And then maybe finally then, I think if we do see something like that, I think the story checks out because we have the resistance here. We have the resistance at 298,300. So if that's what the market is thinking about doing, then it will go up, fill that gap, and then finally see a pullback. And then in that process, you'll see the oscillator finally. So oscillator will look something like this. It will go up as the price go up. You feel that gap or is somewhere in that vicinity, act as resistance. This thing falls back, and then oscillator fall back to is oversold sentiment at that point. And so we'll come back tomorrow, and we'll follow up on that. We'll see how the market is behaving in this vicinity. And we got right above it, we have this gap that needs to be filled. Just long-term recap. So we got the short-term moving average rising here. We got the mid-term moving average rising. We got the longer-term moving average rising. Remember, when this blue dotted moving average rising, we want to continue to give benefit of the doubt to the buyers. And there will be shakedowns. There will be up and down shenanigans. But when you see this moving average rising, you always want to give benefit of the doubt to the buyers. So let's see how the market plays out tomorrow, and I'll come back for you, and we'll talk about it together. You guys have a wonderful evening, and good luck trading tomorrow.